365, shake my hand and welcome to another video. We're looking at Swiss franc Hungarian front. I just did CHFHUF, so please don't forget to check that out. There is actually a potential good trade, in the works there if things go according to plan. Always risk appropriately. Don't forget, I don't know you, you don't know me. I'm just a guy on the internet. I am not your financial service provider. Despite my licensing as a financial service provider, I'm specifically not your financial service provider. Therefore, I can't really give you financial advice. Trading comes with a substantial amount of risks, right? Don't forget that. Know what you're doing. And if you don't know what you're doing, here we go. Just simply hit the link down below and get access to this. The way we teach risk for trading is in line with a portfolio and profit building, right? So you're gonna, but I'm just showing you the risk assessment videos. Don't skip everything else, right? Everything else is still built on the strategy. Our risk rules are built in our supply and demand strategies, and risk follows after you've understood the multiple time frame analysis lectures. There's part one. You've done all the homework and all that kind of stuff just before you are ready to trade. Here's the risk management session, risk management 1, how to grow a small account. That's video number 2. The leverage and pips talks, of course. And I think they've got 2 other big lectures actually on the YouTube channel on risk, right? So this is almost a 2-hour lecture on risk and how we use risk. It's with supply and demand. Absolutely worth taking, right? Without further ado, I'm going to be talking to you guys about Swiss franc Hungarian front. Let me just close this here, right? And I don't trade this asset much, if I'm being honest, but maybe it's something we can look into doing in the year 2023. I just want to quickly see how long ago this was, right? Okay, so it's probably back testing or actually lecturing on this many years ago, 2020, 2019. I don't remember when I drew these supplies, but if we look carefully, just so people understand why price ripped through, there's a supply that was created here. And I apologize for the color, but I just want to quickly explain something, right? Tag 1. On that particular supply, look at this down here also, multiple tags, right? You guys can see down there, multiple tags. That's tag 2, and then tag 3 in the year 2018, right? And of course, there's a demand that broke the camel's back. So obviously, we talk about these. Some supplies, all supplies and demands can be broken, and they will be broken if markets, fill in. Or do what is called glass effect in our academy. And when you have such a long wick, and Swiss franc is notorious for long wicks, you can see markets will do its best to fill the wick, and that's where price is today, right? So I'm gonna take this back to the beginning of time for Swiss franc Hungarian front. In fact, I feel like since I started this series sometime in April, I've just been looking at sell profile assets, and the Swiss franc Hungarian front is one of the first charts that is a buy profile asset, at least according to forex.com. Let's find another broker that can give us a better, longer term picture. I'm going to go to Saxo first. Buy profile asset still. This one goes all the way to at least the 90s, right? So it's a clean buy profile asset respecting supply and demand, I'm on the 12-month chart, and you can see here price wicked out a lot in January 2021 to come collect buy orders from the 2016 area. And ever since then, markets have been rocking to the upside. As you know, markets think in 3 months, take profit in 1 year in a 10-year plan, right? So I've basically got a buy profile asset, and I'm telling you now, if you see anything Swiss franc, just know these long wicks up or down need to get filled. These long wicks up or down these long wicks up or down, generally speaking, over time need to get filled. Because we're dealing with a buy side asset, I am pretty sure we will start to see price filling the wick this way, right? A red candle doesn't mean anything. As you can see, red candle actually always gives us a nice time to load in buys and hold. The assets like this, by the way, slightly expensive if they're exotic pairs, but they're a blessing to trade and hold in the long run because their trends are clear, markets are less choppy, and you know that when price is coming down, it's looking for one thing and one thing only, a valid demand. I've moved now to the 3 months chart, which means every single candlestick in front of you is a 3 months candlestick representing a financial quarter. Take your time to backtest everything that I teach you in the course, right? Backtest every single order block that I teach, every single supply and demand. You will know what to do. Right, but when I'm looking nicely here to the left, this is probably where price is going on the 3 months chart. Listen to what I say. This is probably where price is going. We need to know where price is going so that we can trade effectively. So if we're trading with the trend to go where price is going, we're sellers. Even though it's a buy profile asset, we're sellers for the for a while in 2023, so price can get the alignment it needs to the upside, right? I can't see markets going any lower or any further. There's already been a demand tap all the way there. I don't know where price is going to stop within this green zone. I would prefer it stops there, but I'm not the banks, right? So I have to draw my areas of value, cognizant of my rules, and then start to figure it out, right? So on the governing time frame, we are cursed by these long wicks, and you can see, like I said, markets making a clear conscious effort to fill these imbalances, to fill these market inefficiencies, and fill this wick as price moves on to the downside, right? Where did the wick stop on the governing time frame? Well, it was stopped by a demand, and that's what pushed price up. Markets came all the way down, markets shot back up, and now markets have been filled all the way down. On the governing time frame, it's not just demands that we can see. We can spot that prices actually more recently made contact with a valid supply, creating a long wick to the downside, and now closing in the month of April candlestick. I am recording this on Saturday as well, so you can imagine by Monday, the 1st of May, this candlestick will have closed, meaning markets are now trading sideways, creating a potential continuation pattern to the downside. Why to the downside on the governing time frame? Because that's what price is doing right now. Right now, there isn't a single demand in control, but a governing supply, right? And so we need to simply wait for price to get to a demand, right? When these long wicks come, they do shatter demand zones sometimes, right? Until they get to the best, the ultimate lowest demand. Did that work out? No, and took the whole bullish engulfing pattern here. All right, so we need to see, we need to make a value-based judgment. Will price retest here or break this zone, right? So one of the things that's going to allow us to see is the type of order blocks that we're going to find on the lower time frames. I'm going to draw a line just to meet this wick here. I want this line white because green lines on my charts moving forward just simply show you where the take profit zones are, right? So dropping down to weekly. All right, I can remove this because you guys now know what I was doing. All right, I'm going to tighten my supply on the monthly time frame to look something like this, just so you know, to really start to map out our areas of value that are in control. We know supply is in control, and price last came to this supply on the 13th of March 2023. Supply and demand working. If you opened a sell there, no one would have told you to close it. No stop loss would have been hit, and you'll be swimming in the money, right? Then markets created a new supply the following week, which was 20 March, and then markets now at the end of April have closed with a new supply. A new supply has been formed, and all these weekly supplies are simply to facilitate the will of the governing supply, which is to continuously push price down. If you've been with me long enough, you know there's a high probability risk, a high probability trade, with maybe potentially low risk for you to start setting to the downside, right? You know, we could use other confirmations. We could wait for, you know, price to break structure first here and then do a retest and then drop, or we can drop down with price. as long as you accept the risk. Sorry, let's just quickly go back to the weekly time frame. This is interesting. Look at the sharpness of this wick. It must have been very difficult to try and buy here, buy there, because markets were hunting. But then again, that is the whole point about such a crazy peak supply to the upside and to the downside. Just a grab on both. There used to be a structure very similar to this on USD JPY a few years back that gave me a headache, right? I'm looking at where price stopped. I know on the governing time frame I have a demand. On the weekly time frame, it's not a beautiful demand that stopped price, right? So let's go to there we go. That's so much better, right? Akini Hashi candlesticks, right? You can see now. Now we can see a rejection of doji candle. We can see sellers coming in, dummies. You can see clean momentum. Now it makes a lot of sense, right? This makes a lot of sense. That supply makes a lot of sense. This supply makes a lot of sense. That the contact there and now trading sideways is a PCP. So the month of May has to kind of like make up its mind. It would be unwise for it to break this supply. Not unwise, rather, it wouldn't be nice. But don't forget that there is a higher supply just above here, right? So price could do just that, right? Price could trap us all into thinking it's time to sell immediately and then come back first and collect some higher sells here. The daily time frame should help us make some clear decisions, right? So you can see last week really ended off interestingly. On Wednesday last week, markets created the supply. On Friday, markets made their way to retest this zone. If I start to tighten all these weekly supplies into daily supplies, I can get something like this, right? I'm going to use the whole candlestick for now because what markets are reacting to. If I want to risk little or protect my areas of value, I can do something like this. I should also point out that on the daily time frame, we still have an active daily demand where price is right now. We need that to break. And when that's broken, excuse me, but we still need to deal with that previous low, down literally beautiful low of the month of March. Okay, so this is literally a couple of things that we need to really consider when looking at this chart, right? So I would, in a normal world, prefer markets to take out the demand and then come back here and then we go, right? I'll gladly sell. But I also know for a fact that price does not have to do what I want. Price doesn't have to take out this demand. Price could come back up and push, at which case, already I've put in a set and forget. So if I do sell, I sell. And if this area doesn't work, then I am aware of the fact that markets would prefer a higher supply, which makes so much sense. And this supply, the higher supply, would be nested in a weekly supply, a higher weekly supply. This is also in a weekly supply, but this would be a higher weekly supply. So I'm going to have to either ignore zone 1 and wait for price to get to zone 2, or have two separate pending orders with a stop loss in between, like basically by my proximal line of the first trade, which is not always nice to do, because then you take a hit and then get triggered into a trade straight after before you have time to really acclimate what to do. When you are a disciplined supply and demand trader, the rules are generally very simple for that situation, which is there is no zone here. Just wait for the higher supply. Generally speaking, that's the rule. But you can see for yourself, we've already had a fresh touch, and now we've already had a retest, and the retest was longer than the fresh touch. And that's why we want to keep that second supply in play, because this second supply is fresh. Oh my goodness, when you combine all those rules, which is why I said in my CAD JPY video, a lot of people rush to my Trader's Edge. Module 1 is armed with basics. I mean, if you could make this into an audio, it says that you need to see the stuff I'm doing there, especially these lectures here, lecture 6, 7, and 8 on areas of value, right? These are important lectures, right? 108 minutes. The other one is 110 minutes, right? So almost 1 hour, 30 minutes to 2 hour lecture series, right? Literally a lot of stuff is put into the 365 Trading Academy course, and I want you to take the time to understand the stuff, because those small rules are what help you decide on what to do. The other thing then that you could do is, if you decide that you're really committed to the long term picture, which is easy as a swing trader, is you just look at the area of value and you go calculate the risk of having your proximal line here and your distal line there, whether you're going in 0.1, 0.10, whatever your capital account looks like. You look at the weekly time frame, you agree that you'll be protected if you do something crazy like that. And if the answer is yes, and then you look at your take profit target, right? Where next on the weekly time frame will price most likely slow you down, right? But that's all I got for Swiss franc Hungarian franc. Again, it's not really my favorite asset to trade. In fact, I don't really trade it that much. But yeah, well, maybe we should start to look at all these other exotic pairs. There's money everywhere, supply and demand works everywhere, and that's what I want to encourage this year when we're going through a war, right? Don't forget to like, share. If you made it to the end of this video, you're a rock star. I always tell people the best way to make money through my trading signals is just simply by paying attention, just showing up, watching, liking, practicing what you see, detailing it down on trading journals. Slowly but surely, every day and everywhere, you are becoming a better trader. Right. Looking forward to seeing you in the next video. 365, shake my hand. Until next time, peace.